Hello, everybody. Welcome to another episode of the TF podcast, where we discuss technology and finance and how that's impacting the world. Often we discuss Bitcoin, blockchain, and cryptocurrency. But for this conversation, I'm with Bill Wreaks. He is the founder and CEO of the Gramercy Institute, and I'm excited to get his perspective on financial markets and the marketing side, as well as the financial education and literacy and those sort of side. So with that, Bill, I'd love if you could introduce yourself to everybody.
Yeah, Jonathan, thank you. Yeah, my name's Bill Wreaks, and I lead a company called the Gramercy Institute. We are, I guess, just about 18 years old, and we are a think tank for senior marketers from major financial firms, and that's probably the best way to explain what we do.
Nice. Well, what would how does a think tank operate, real quick, for those that might not be familiar with something like that? Are you providing education? Are you having them come in and they, provide their guidance? How does that typically work?
We produce about 20 different conferences or forums every year in 8 different world markets around the world. Obviously, they're major financial hubs, but they're also crossroads for advertising and marketing. So those markets are limited for us. So we're in London and New York and Toronto, San Francisco, Boston, Philadelphia, Charlotte. I probably forgot one, but we host about 20 different forums every year. A lot of them are where our content comes from, but also we produce research and white papers and interviews, especially these days.
Yeah, definitely. The content game has changed quite a bit, right? With not being able to be in person. I guess on that note, real quick, how are some of the members of your think tank, thinking about the new paradigm when it comes to content, either from a creation standpoint or a consuming standpoint? How have you noticed that change?
Yeah, well, I think that just as you and I had discussed or had mentioned, this pandemic has forced us all, whether that's a good force or a bad force, but it has forced us to look inward, and it's forced us to think about what it is that we do and what's the value that we offer, and how to project it out to the industry in a thoughtful way. So content, obviously, is one of the things that, and I'll say we as a network are focusing on, but I will also say that our constituent firms are focusing on as well, because that's really all we have right now to engage with our audiences. If you are a asset management firm and you're looking to engage with advisors, you're going to be forwarding them relevant content, whatever format that happens to be in, to get their attention, to capture their interest, as well as to add value to their lives. Same thing goes between that advisor and his end customer. Content, how can I be relevant? How can I add value to your circumstances? And in a situation where you can't take someone out to lunch anymore, you can't go out on the golf course, you can't sort of do those more I'll say more whimsical kind of things to connect with your clients and with the people who you do business with, it's got to come down to the content. And
Right.
So I think there's been a, I'll call it an explosion, but there's been a real force that's happened out there where people in our industry are focusing heavily on quality content, keyword being quality there.
Sure. When I think about the term financial marketing, I'm really interested in unpacking that quite a bit for lots of reasons, right? Is that, we traditionally think of finance as this very historic or incumbent type of industry. And as well as one that's typically very conservative, right? And so, one, being able to market financial instruments, there's also even legal implications behind that, right? And how you market and how you deliver that message. So I'd love to just kind of have a better understanding of how financial marketing works.
Yeah.
Even if you have like some examples of the ways that it's done. And then from there, I definitely think we could relate a lot of that to what's happening, right now.
Yeah. Well, you are absolutely correct. Is that it is it sort of has this when you think of financial services firms, you think of this stoic sort of um, unchanging kind of situation that is difficult to market or doesn't market much, or almost like, well, it's sort of like a law firm. They don't really market very much, or they don't need to. And that's how it used to be. And I'm old enough to remember, though, the days. I've been in financial services marketing since, I don't know, the mid 90s or so. But really, where that was the case, I remember conversations with Chase, before it was J.P. Morgan Chase, with Chase, saying that I don't think we're going to want to put a URL on the bottom of our advertisement. And just a quick anecdote, really how I got my start is with an ad agency called Gramercy in New York, where we focused on what was called tombstone ads, which was how investment banks would market to would market to the world, where they really resembled tombstones. And it was the one way they could market themselves or beat their chest a little bit, these investment banks, while still falling within the regulations of what the SEC would allow them to do. But to move fast forward, it was luck. I wish I could tell you that I thought this all through, but when we started Gramercy Institute in 2002, we realized something was going on, but we never thought to the degree that it was really happening. In that, the way that financial services has the way that Wall Street has come to Main Street has been incredible. So the way that we as financial services firms market now to our constituents has changed along the way. There are, in many cases, we start resembling some of the consumer products that you might handle every day. I mean, obviously a little bit differently, but in some cases where we're able to, if you're talking about brokerage services or cards and payment services, for example, you'll find them on you'll find ads on the Super Bowl, or you'll find in different sort of fun and whimsical kind of fashions that you otherwise just wouldn't years ago. But still, there are other kinds of advertising or marketing that are a little bit more slow to adapt, and that's for good reasons. We don't want to, as they say, money is not funny. You don't want to make too much light of it. You don't want to make people think that we're not being serious about this. So I think that it has come an awful long way in a relatively short period of time, borrowing from some of the other product categories that we see. But I think you are correct, though, to say that there are limits. There are limits in taste, and there are limits in from a regulatory point of view as well.
It seems like some of the fintechs that have come out have caused the traditional banks to get younger in their marketing. You know what I'm saying? So like yes. you think of something like a Robinhood, or I mean, you could even argue going 20 years ago, as far back as PayPal, kind of causing these banks to think a little bit differently. Curious what your thoughts are on over that, is how fintechs or startups in the space have influenced the incumbent and traditional banking ecosystem.
They definitely have, and you'll get some of these newer brokerage or firms, like let's just say Personal Capital or something like that have really pushed the limits of what some of the traditional financial firms, financial services firms have offered. and they have definitely influenced the way they market themselves. It wasn't, I remember we were in London. This was, some time ago, maybe 5 or 6 years ago, and the conversation came up is that, now wait a minute, now let's just take a look. If some of these tech firms have laid the track, they have great customer service, they have great relationships, they have a better system, they can do all this that, we, these big financial firms, are really fumbling with. And I think that a lot of the bigger, more traditional financial firms have borrowed quite a bit from these newer startups, but also it is showing through in their marketing as well, because the whole idea of being disintermediated is really out there for them.
Yeah.
I think you'll agree with me. What we are seeing, though, is that some of the bigger firms are reaching out and partnering up with some of these newer startups in order to have their cake and eat it too.
Yeah. And one of the things I find super interesting with these fintechs, or these smaller banks that are going after the incumbents, is they often have to use, not often, they are using legacy banking infrastructure, right? It's not like they're creating new rails, and they're almost always partnering with a legacy bank for charters and things like that. Can you talk a little bit about that for those that don't really understand how that works?
Well, just so I'm understanding your
like the Bank of New Hampshire, I think it's Bank of New Hampshire, or like some of these small banks, or quote unquote small banks, they do a lot of the people use, I can't remember what the actual bank is called, but I know there's a lot of fintechs that'll use these charters of these smaller banks to then be able to provide banking services, right?
Yeah. Well, that's exactly it. You'll need trust powers. You need banking authority. The technology has far exceeded, and the benefits that come with it has far exceeded the laws and the way that we do things. So that you have to be chartered in a particular state, in a particular country. Obviously, the United States is what we're mostly talking about here. But in order to do business, in order to conduct your business, so yes, oftentimes you will see a startup that will partner with a traditional, could be a far lesser known brand, or a medium regional bank, or even a credit union, just so they could have their banking powers in order to do what they need to do. But it's smart, and it makes sense for everyone. I mean, you're seeing some of this done in the education industry as well, borrowing from that idea that you need the accreditation in order to do some of the things that this sleepy old bank or institution has not been able to do. So yeah, it's a tactic that's often employed, and it makes an awful lot of sense. It's almost until the technology is going to catch up. Until the laws and the legal system will catch up to the technology. Those kind of partnerships are going to continue.
Yeah. Now, we're in this obviously new paradigm right now, with COVID-19 and people staying at home, as well as uncertainty in the markets overall, even though they have been, quote unquote, have rebounded, if artificially. So what does that do to overall the perception, from some of the folks that you work with, and where are they at, like when they think about the current state? For them, is it business as usual? Is it, hey, we need to adjust significantly? What are you seeing overall?
Well, this is for me, myself, this is probably my third crisis having been in this industry. I'm actually old enough to remember the one in 1987, but I was not in this industry at the time, just a child. But I have noticed that now what I'm referring to is I'm referring to the crisis of the big downturn of 2002, 2003. That was financially, the financial system was responsible for that. We won't go on about it, but it was. In 2008, same thing. The financial services industry was really responsible for that big downturn. Right now, the downturn that we're in right now, and we'll call it a downturn, even there are really very few symptoms that are showing up we'll call it a downturn, but let's just sort of call it maybe a crisis right now, is so far different that it's barely in the same category. And that is, I find that to be really interesting. And well, first of all, financial services is not responsible for this crisis that we're in right now. And in fact, we are part of the solution. And that's one of the big things from a perceptual point of view that really made marketing very, very difficult in 2003 and 2008.
Because there was a lack of trust at that time in the banking sector. Yeah.
Man, like, remember, I told you that we do conferences all over the place. I can't tell you how many panel discussions I moderated back in 2008 on the subject of how do we reinstill trust into this industry. That's not what we're talking about now. Yeah. And I say that because, as I say, we are looked at as a solution. The market has stayed up there, more or less. And people today, at this moment today, have significantly more financial needs than they ever had, because they're all worried. They're all looking. People are without income, so they're looking at their investments. They're restructuring what they need to do. And the communication lines have got to be open. Whether it's sales or whether it's marketing or whether it's just good old advice, like, people need to be spoken to. And I'm going to say that there's a bit of a halo around the financial services industry right now, and marketing is doing its job. To our earlier point that you and I were talking about content, content needs to be relevant. Content needs to be valuable. And if it markets in the process, that's awesome. But these lines of communication have never been so open, because that's the mandate coming down from a lot of the bigger financial firms. Talk, communicate, make sure they know you're out there, make sure they know that you're, that we're safe and that your money is safe, and give them the best advice that you can at this moment. So it's a long way. Go ahead.
Oh, no. It definitely is an interesting point, because just as you stated, in those past crises, there definitely, the majority, if not all the blame, was on the financial sector, whether that be stocks or mortgage or whatever it was. Yeah. And so you're right. It is an interesting paradigm right now where the blame isn't necessarily on them, and they're more seen as this tool. Along with that, though, is the government has been getting some flack from a management of resources standpoint, right? When we think about all the printing of money and the quantitative easing and stimulus and so forth. Yeah. Where it seems as though the burden of responsibility has been placed on the government standpoint, and we can debate whether or not they're acting appropriately with how they're spending the money, but they're using banks as partners, right, to then be able to distribute the partners. So the banks are just playing within the rules that have been set to them by the government. So whether or not they can deliver because they have the access to the funds or whatever that be, even if they're gaining interest or they're gaining because they are making money on these loans as well, they're seen as a good guy. And that's a really interesting viewpoint, whether it's correct or not. I'd love your thoughts on just that overall.
Well, you are right. The banks, whether they wanted to be involved or not, the banks are part of this solution. And I think while people all over this country can debate till we're all blue in the face about, what should have been done, how much money should be allocated, how we're going to do it, all that. That's a governmental thing. But in terms of the institutions, and I will agree, I will be the first to say that it hasn't gone, terrifically smoothly, but you know what? It's gone pretty smoothly considering the amount of money that had to change hands with, I'm talking about PPP loans, I'm talking, about a number of the stimulus checks that had to get out and get into the right hands with the proper, recording, and how quickly it's been done. So the banks and the financial institutions, even like you look at like PayPal has been a big part of this, for example, because of their connection to the customers in terms of executing PPP loans. But they've been looked at as the good guys. Yes, there's been technical problems, but at the same time, I think that people are pretty much smiling at the bank, saying, "You guys are really helping us out, and a big part of this solution, not of the problem." And I think from a brand perspective, I think markets as well as customers will continue to look at financial services firms in a positive light. We've something interesting too. We did a study. If I may say so, it was one of the smartest things we did when we saw this thing coming in like early, like the first 10 days of March, like around March 10th or so. We realized that this was kind of blowing up, that this was, as if you will remember, the crisis really happened over a period of days. It went from like, okay, that's kind of weird, to, oh my God, we're going to be indoors for the next month or two. That's what we thought then. But one of the things we did is we did a study immediately about what people are feeling and what people are thinking. At that very moment, I'm just sort of consulting some of my, one of the things that you might find interesting is that the demand for financial products and services remained high. 85% of financial brands, this was 10 weeks ago, said that they have either more or several more financial needs than they did just a month earlier. In other words, like, wow, the utilitarian necessity for financial services firms and doing their job is more important than ever. And then also interesting, and back what I was mentioning to you before about the other crises, I do believe that we as an industry, financial services, marketing, or financial services itself, has learned from previous crises. And that I'm just referring to my source here, 86% of financial marketers reported that they not only have a crisis communications plan in place, but they are using it right now. And that was sometime around the 16th, 17th of March or so that question was asked to about 150 different financial marketers, but that they had it in place and they were using it. And so my point is as an industry, we were ready for this crisis. We knew the steps that it takes. We're not going to freak out. We're going to keep calm and keep communicating, and that's exactly what we as an industry did. And it's one of the reasons why I think that we're looked at this moment with some admiration rather than with some frustration, as was the case, in crises past.
Yeah. One thing that, it's a big hypothetical at this point now, or I guess a what if, is we had been experiencing 11 years of, call it good markets, right? Since the last downturn. And, there had been a little, before Corona, there had been a little bit of, concern of potential downturn, right? So part of it has been like, hey, it's been good too long. Part of it has also been just, other scenarios. Do you think, did the financial services industry get, I don't know what's the best way to say this. I don't want to say saved, but did they get shielded a little bit in the coronavirus aspect? Meaning, if coronavirus doesn't come at all, would we have a financial issue not related to the pandemic? Obviously not at this scale, right? Because the scale has turned lots of things. In 2008, you could still go to a baseball game or go to the movies or go out to dinner, and so forth. Obviously, commerce in a physical context has essentially stopped. Curious what your thoughts are based off what you've seen, and to I guess technically pre-COVID.
Well, I think you're raising a really good point. It's a really interesting point, and I think you are correct that every market has its run, right? And this has been a growth market for right. I think it has been 10 or 11 years or so, where things have been, employment has been growing, the market has been heading north, and this has been a really good run. And you are correct that there had been some tremors, and it's, I think it's more, it's just, the conversation starts going about like, how long can this last, and you get one little whisper and then, it turns to another. And as this is it's all based on confidence. It's all based on, and some world events might happen where it makes people wonder. And again, how long is this going to, so I think, and this is purely my perspective on this, but I think there's some truth in that, because and in what you're saying, being that there's a little bit of a little shielding maybe that's going on to the markets once we get through this, and in part it's because there's some factual elements to this, and there's been a lot of stimulus. There's several $1 trillion that have been put into the economy to stimulate our economy, and we got that, and I think now, of course, the employment outlook, unemployment is going to be disastrous for a while, but I do think that there is a little bit of shielding that has taken place at the financial services firm, because we have come out as good guys in this, and we should be coming out as good guys in this, because we've done our job. We have, as I say, we've had our crises communications in place, and we have been using them. We've responded well to the needs of those customers, those 85% of customers who report that they have more needs than ever right now. And so we've done our job. And I have a feeling that absent the factor of the unemployment, that financial services and financial markets will be, will come out of this okay. So will we have another bull run? That's hard to say. And again, the unemployment is what kind of scares me a little bit, because as that's not the kind of thing that's going to be flip on with a switch. It's going to get real better real quick once we're really sort of out and being able to get back to work. But there's still going to be a high level of unemployment. I think, though, if I may say, I think there's going to be continued trepidation up through the election. And whatever happens at the election, is going to at least reinstill some sort of direction in terms of which way we are heading. And I think at that point, we probably will have some more good years ahead from a market's point of view.
Yeah, it's interesting when you think about the unemployment, like you said. I'm super fascinated for when earnings reports come out for Q2, because sure, you'll see the Walmarts and Amazons and probably Facebooks and anybody that's dealing with like digital ads or Netflix is up. But everything else, I can't imagine they hit expectations. We'll see. I'm really curious for that and what that does, for confidence overall as well. Go ahead.
The big thing is the smaller. It's the ones that are not traded, that are the ones that are going to be suffering the most. To your point, I can go down to Target right now, and I got a kid who's having a birthday next weekend. What does he want to get? Fine, tennis racket. What do you want?
Yeah.
But I can't go to the specialty store on the corner because they're not open. The ones that sells tennis, the tennis store. So those are the stores that are going to be. Those are the types of businesses that are going to be suffering, and so I think that, from a market's point of view, from what the Dow Jones Industrial Index is going to show, is a pretty healthy economy. but it's the unemployment and the people that are able to support that economy that are going to be weak and suffering. And so it's all about getting those people back to work.
Yeah.
That's really that's the answer to your question, if I may say.
Yeah.
After the election, it's how quick can we get those people back to work, and that's going to determine the direction of our economy, I think.
Yeah. Yeah. I've been saying this for a little bit that, in this crazy movie of 2020,
Yeah.
the election is the final scene, or it's
Yeah.
basically a climax of the movie. Um, and then, like, who knows what happens in December, because we've had things like, these murderous hornets. And have you heard about those locusts that are coming out of the ground, or not? What are they called? Not locusts. They're cicadas. The cicadas are going to
Yeah.
be coming out.
No, you're right. It's the 17th year for a cicada. That's when they come
Yeah,
out.
there's like trillions of those coming out.
Yeah.
Not hundreds, not thousands, not
Yeah.
millions, not billions, but trillions of these cicadas are coming out. So,
It
uh,
is. It is. We're going to look back on this as really just, I believe it's going to be a transformative year.
yeah,
Now what it's going to transform into, I can't really tell you, but this is affecting
yeah,
so much of the way we do business too. And I'm referring to the way you and I are chatting right now. It's going to make people rethink a lot of things. I think there's that dynamic of, well, I've gotten some great family time, back home. I haven't needed to commute in and out. I wonder how it's going to affect office real estate prices
yeah,
in bigger cities. There's a lot of things that I think people are going to be rethinking.
yeah,
Um,
definitely. I
yeah,
definitely agree with that. Well, and then also it'll be interesting to see how that evolves over time, right? Because, you
sure.
know, I definitely see like this change and this consolidation, but, I could see in 10 years that, if assuming that there's cures, or it goes away or whatever, I could see in 10 years, maybe longer, things getting back to a similar state where then office real estate does go up again. It's like, we have to remember the increase at which we've increased as a population, right? We're like almost 8 billion people now. And,
Yeah,
so it's just consistent change. I want to shift the conversation a little bit to cryptocurrency and Bitcoin, and just what you're seeing from your perspective. From my point of view, I think of the legacy financial system as, call it, your traditional finance, and then your cryptocurrency Bitcoin as, call it, alternative
hmm
finance.
hmm
I'm curious what your thoughts on how some of these banking institutions, financial institutions, what is their perception on Bitcoin and cryptocurrency in your eyes? And I guess let's just start there.
yeah. Well, I think every institution that I deal with, has got their eye on what's happening with cryptocurrency. I do think, though, there's obviously there's a reticence to really embrace it. And again, my closest allies being the larger financial firms. I think it's the uncertainty of uh, both from a medium and a long term range that is really um, stymieing this real full embrace and I say of it conceptually. Um, so that's really my perspective. I mean, what do you see? What do you see from your perspective on
Yeah.
some of these bigger institutions?
Well, I think it's interesting in that, I would. A lot of people have this perception of Bitcoin and cryptocurrency being one and the same,
Yeah.
and I think that's a first misconception, for, I guess, those that might not be super familiar with the space. And so, I, I would my if I was speaking to a financial institution, for instance, I would say, first, let's decouple Bitcoin from
hmm
other cryptocurrencies, right?
Yep.
And so if we think of Bitcoin, you can think of it as asset. Goldman Sachs is actually having a call today, and they're saying, that it's not an asset. But if you think of Bitcoin as its own financial instrument, then from a banking perspective, I can understand why a bank might not want to, um, deal with Bitcoin other than the fact of creating margin off the buying or selling opportunity of it. So just like they would on any financial instrument they sell. So I'm looking forward to, and I really see the day when you go to JP Morgan Chase and you are just a, Joe from anywhere, and you're
Mhm.
like, yeah, I'm looking to talk to a personal banker, and I'm getting, I want to add to my mutual fund, but yeah, I'll add some Bitcoin.
Yeah.
I definitely see that day. And the reason why I think a bank would do it is not because of the altruistic viewpoints of Bitcoin. So a lot of people in Bitcoin were first drawn to it by this self-sovereign aspect of it and being control
Yeah.
of your own money and having access to it, which I think there's a lot of value. And what I've said many times is those that do treat Bitcoin in that manner, regardless of where they acquire the Bitcoin, and they have, financial custody of their Bitcoin, I think they will always have a leg up on everybody. However, like, there's certain people that just won't ever do that.
Yeah.
So providing them with the opportunity to get involved with Bitcoin as an investment or as a, whether that be speculative or long-term, however you want to perceive that, but allowing the masses to get involved there, I think becomes very interesting. And banks are the most primed to be able to do
Yeah.
something like that. And I've never seen a bank say no to money. Um, so, yeah.
Well, I agree that, look, Bitcoin has been around for, now help me here, 13 years?
We'll call
Years?
it 12 years, 11, 12
Okay.
years, since 2009,
Mhm.
basically.
All right. Time is on its side. And I say that because, there's, the axiom in financial is that, what can we do to mitigate risk? We want to
Right.
mitigate risk here.
Yep.
Um, and the last thing they want to be accused of is, jumping into the sack with, the biggest, brightest, brand new thing because it's the biggest, brightest, brand new thing.
Sure.
Bitcoin no longer is like this, this brand new thing. And I think that, as I say, time is on its side. There's also generational shifts that are happening. I mean, there are people who are, you know, leaders at some of these major financial firms who are in their 60s, and they're just not going to get it. And I say that it's just too risky. I can't get my head around it. What do you mean it doesn't really exist? Or I can't hold it in my hand. And there's just those kind of walls that are that are not in favor of it. But these generational changes will happen. So, for example, another decade from now, you and I maybe will have this chat, and things will be entirely different. It'll be entirely
Yeah.
different. A change of the guard, and Gen X's will now be in the very top seats, at some of the major financial firms, and it'll be a lot different. So, with the idea that nobody likes anything terribly risky, and you can't quite understand, that's the key.
Yeah.
So time is on its side.
Yeah, I think that's a great point on the risk standpoint. In that, I had someone on my show and we were talking about how, when companies manage more than $10 billion or institutions manage more than $10 billion, essentially their risk profile is very low, right? Like they
Yeah.
just don't want to mess with that. Maybe a smaller institution like a local bank or credit union might
Yeah.
consider it because, they don't have as many eyes or people, I guess, that are going to get hot and bothered about it.
Yeah. And,
So, oh God.
and I was just going to say that, remembering too that in the world that we are now in, is that the communication cycle is so robust right now. Whereas any mistake that happens, any bad direction that a significant financial firm might go in, any mistake that they regret, gets communicated out and gets recycled louder and louder and louder throughout the entire chain of communications, and it can explode. And that's why one of the things is, it has made financial firms much more, well, I won't say they've become more conservative, but I will say that they have been very, very mindful of the fact that communications can get out of control over a small little embracing of a concept that they don't quite understand. So I think that's one of the things too, that they need to feel like they understand it and they get it, and that will happen. That will happen.
I think the other really big opportunity for banks is in the cryptocurrency standpoint from a stable coin. And where I go back to as a technologist and, essentially a product startup person, is that when you are building products or when you're building solutions for a company, typically what you're doing is you're solving for your requirements, right?
Mm-hmm.
And so what satisfies your need. So I think of someone like JP Morgan Chase and how they've created their own stable coin, the JPM coin. And to my understanding, in the study I've done of it, it's basically just to send money back and forth within their system, simpler, easier, faster, right?
Yeah.
It's not to disrupt Bitcoin. It's not to be a competitor of Bitcoin in any way, shape, or form. And so I think that becomes a really interesting opportunity, again, from a business standpoint to banks, is to think about how they have their own in-network currencies. Visa actually just announced some patents that they're going to be that they announced in regards to having their own digital currency as well as and blockchain. So I do really believe we'll start to see banks thinking in that regard. And I think those are the ones that are going to last. The ones that put the brakes and say like, oh, that's not going to happen, or we're just going to stay with legacy rails. I think we'll see, get consolidated or go away.
I couldn't agree with you more. And I think that, and I'm not saying they're not being forthright by saying what their ultimate idea is with some of these internal currencies, but I do think, it is a toe in the water, and it is, let's get comfortable with the concept and take it little by little in terms of where it can go. Back to the point we were talking about, is that people have got to understand it, and step one is like, all right, let's just use it in-house. All right, let's just use it amongst ourselves. What's the risk? What could possibly go wrong? What's the risk? And get everybody kind of using it and comfortable. And then of course they'll be much better poised in 5-6 years if they want to do something further with it.
Yeah, definitely. I totally agree. The banks really do need to start thinking about that. And at the end of the day, what I think the public and anybody on either side of this needs to just realize is that banking institutions are financial entities that have shareholders who, and if you have shareholders, that means that you basically have a charter to increase shareholder value. So you're going to be doing things that create shareholder value, whether that be technological, investment-wise, or other, right? So for me, when I think, that's why I'm really interested in, from a JP Morgan, and how they're thinking about these stable currencies, right? So if they're obviously thinking about that, then they're seeing the opportunity for that to increase shareholder value overall. And again, that doesn't mean that it's going to have the altruistic principles of Bitcoin. It's not going to compete with Bitcoin. It's just really its own private thing to do their business better. And I think that makes sense in how companies need to operate.
And I believe that. I believe that it is their here and now. Like, this is a practical solution for us, and it's a good idea. I also think that they do have it. They do have. They've made notation that this is also good for our future as well, because we will be poised. One thing that became clear to me a few years back, I won't, I don't need to tell you about the circumstances, but something you got to remember too is that these major banking institutions, to your point about they all have shareholders and they all have to deliver value, they also have to deliver that value on a quarterly basis. They are pretty much looking at the day, one quarter at a time. How are we going to deliver on our numbers quarter by quarter? And as I say, it sort of became clear to me that, planning too far for the future is a little bit of a futile exercise, beyond what you just, the
Sure.
normal season of planning, because you don't know what the future is going to hold. So I would imagine it does sort of leverage them a little bit better, does hedge the bet a little bit better to get their toe in the water of some of these in-house currencies, if we will call it that. Just get themselves ready for it. Maybe we'll do something further with it. Maybe we won't. At the moment, though, let's focus on our numbers right now.
For sure. For sure.
Yeah.
Well, Bill, I've super enjoyed this conversation. I love to end all of my interviews with a question for you to ask to everybody else. So what is a question you'd love to leave our guests with as they go about their day?
Yeah. Well, you can ask me if you want me to be more specific with this question, because I can do that too. But what is the new normal going to look like? That's my real question. And you and I touched upon a little bit, but whether that means what is our new normal in the financial services industry, the new normal in the financial services marketing industry, or just the new normal for us all. What is that going to look like? And what has these 90 days indoors? It has done a lot more than just these 90 days indoors. I think it's changed a lot more, and I'm interested to know what that's going to look like.
Totally. Yeah. I'm super interested to understand what the new normal is in finance, right? Like how we transact, how we interact. A lot of people are saying things like, oh, the dollar is going away now, as in physical cash. Like, does that really happen? Because it's interesting, and not to go down this tangent, but I feel like as society, we have short-term memory when it comes to things, right?
Mm-hmm.
I mean, case in point is that there, and it's also, of course, different belief systems, and I don't want to get into that side of it, but it was Memorial Day weekend this past weekend, and there's tons of people on beaches and boardwalks and doing whatever, right? So like the memory of being locked in place was evaporated because these places were sort of super packed. So it'll be interesting to see how that evolves from a work context to a financial context, and we'll just have to see.
Yeah, no, I don't like. I don't know if this has just been 90 days of doing something this way, or if it's going to fundamentally change the way we do things. We host 20 different events around the world every year. Is that going to change? Am I going to do 10 now and do 20 others like this? Or, I don't know.
Right.
I don't know. And that's what I'm interested. Or has this just been 90 days indoors?
Yeah. Definitely.
Something in between, I guess, is the answer.
Well, Bill, thank you so much for coming on the TF podcast. What are some good ways that people can stay in touch or follow up with what you're doing? You're
very nice to ask. I would say, you know what? Our web address is gramercyinstitute.com. And Perfect. That's probably, you can find out all that we have going on, a lot of things. Right now, no physical events, but a lot of content. We do some award programs. I'm just FYI, this is not about promoting myself. I'm just telling you, we're doing some award programs as well, and that's one of the ways that we've been keeping ourselves forward in the community. And we have one happening right now called the Gramercy Financial Marketing Leadership Awards, and the response to that has been huge. And like the typical comments we're getting are, "Oh, thank heavens, this is something really positive that we in our industry can focus on." So anyway, so that's one of the things we have going on, but you can find out all about it at gramercyinstitute.com.
Excellent. Thanks so much, Bill.
Everyone, thank you. I enjoyed our talk.
Of course, yeah. Everyone, thank you for listening to another episode of the TF podcast. Please make sure that you are liked and subscribed wherever you're listening to this podcast. Do us a favor and fill in those stars. It goes a long way in making sure that we get our our podcast in front of other folks. And also you can follow me at JG Product on Twitter, as well as at TF Labs Media on Twitter for the TF podcast. Thanks so much, and we'll talk to you all soon.